Okay guys, in this video we're going to discuss some ifhp questions. In the last video we have done some ifhp concepts, right? So we're going to start all the problems related to all concepts. We have discussed several concepts like let out of property for the full year, for the part of the year, or portion of the property let out, or deemed to be let out. All these things we have discussed. Now in this video we are going to solve some problems. So whatever the PDF I have sent to you, so from there we're gonna do some problems. Okay, so the first question we're gonna do something about this, and before doing this question we need to revise one concept which we already done. If you remember rule 4 regarding the unrealized rent, if you want to claim the unrealized rent you need to satisfy the conditions. What are the conditions? First, you should be bona fide. The tenancy should be bona fide. That means it's a genuine, there is nothing to deceive. Okay, then condition 2, all legal proceedings you have taken, like you have taken all the legal proceedings to recover the money from your tenant. But and then condition 3, and that tenant is not residing in any of your house, right? That means the tenant vacated from your property, you took all the steps to make him vacate, and then he is not staying in any of your house, in any other property, he is not staying anywhere. If all these conditions are satisfied, then from actual rent received or receivable, from that you can deduct the unrealized rent. So if it's not, then you cannot. So with that concept, let's discuss this question. Question number 2. Disha Khanna, a resident of India, owns a house property at Bhiwani in Haryana. The municipal value of the property. So let's write here. So municipal value is 7,50,000 and then fair value is 6,30,000. So what we're gonna do, we're gonna take whichever is higher, which is 7,50,000. Then you compare it with the standard rent. Standard rent is 7,20,000. Whichever is lower, you will get 7,20,000. This you will call it as expected rent, right? Now let's read from here. So whatever the details, so far whatever we have written here, this covers, entire thing covers. Okay, next one. The property was let out for 75,000 rupees per month for the period of April 2017 to December 2017. Okay, that means out of 12 months, so April to December only, January, February, March, thereafter, that means after December, thereafter the tenant vacated the property. That means January, February, March, there is no tenant, and Disha Khanna used the house for self occupation. Immediately you should remember, after reading this, thereafter tenant vacated the property and Disha Khanna used the house for self occupation. So this is the case where the property is let out for part of the year. Okay, property is let out for the part of the year and then self occupied for part of the year. We have discussed in that scenario, if the property is let out for part of the year and then self occupied for part of the year, what do we do? Come to our notes. Okay, so if you see, the first one is let out for the full year, second one is part of the year let out, and then part of the year self occupied. Then we have to do expected rent for the whole year and then actual rent for the let out period, whichever is higher. Okay, in other words, this is the same normal thing which we do, high low high thing, right? So obviously actual rent will be normally lesser only, because the only part of the year the tenant stayed in that house, so rent will be collecting only for few months. In our example, like he stayed for let's just say how many months, 9 months. Okay, 9 months. So for 9 months only we will collect the rent, but expected rent you are collecting for 12 months. Obviously expected rent normally will be the bigger. Okay, so that's why you are taking notional income. That means even though you did not receive the money, but still we will tax on it. Okay, they have their reasons. Now we don't want to get into all those. What we're going to take, whichever is higher. So we want to find out expected rent and actual rent, whichever is higher. Fine. Come back to our question. Rent for the month of December 2007, November and December 2017 could not be realized from the tenant. So that means there is a unrealized rent. The tenancy was bona fide, one condition is satisfied, but the defaulting tenant was in the occupation of another property of the assessee, paying rent regularly there. It doesn't matter whether he is paying rent regularly in another house or not. In the he should not stay in any house of the assessee, right? That is one of the condition. But the tenant is staying in some other house. Okay, see, it's a simple common sense. If the tenancy is a default, like if the tenancy is not paying rent only, why are you giving another house to him? Okay, so the one of the condition is not satisfied anyway. So since the condition is not satisfied, you cannot do actual rent minus unrealized rent. Okay, so rule 4 conditions are not satisfied. Okay, so we will take how many months we will be collecting rent? Actually April to December. Normally November month, December month we did not receive any rent, but still we won't deduct it, right? So how many months? 9 months. How much we are collecting every month? 75,000 per month. So 9 into 75. So if you do that, you will get 6,75,000. So actual rent received or receivable is 6,75,000. We have to take whichever is higher. That's what we've seen here, right? So we have to expected rent for the whole year and actual rent for the let out period only. So this is 6,75,000, and then what do we got here? Expected rent is for 7,20,000. We will take whichever is higher, which is 7,20,000 is the higher. Okay, now let's start solving that question here. Okay, whenever you are solving any question, you stick to the format, right? What is our format? First, finding out the gross annual value. Did we find out the gross annual value? Yes. Whichever is higher, right? Which is higher? 7,20,000. So 7,20,000 is the gross annual value. 7,20,000 minus municipal taxes, if he has paid any municipal taxes. Let's come to the question. Did he pay any municipal taxes? Okay, so she paid municipal taxes at the rate 12% during the year. Okay, so what is the municipal value here? The municipal value of the property is 7,50,000. So 7,50,000 into 12%, you will get 90,000. So gross annual value minus municipal taxes, then you will get net annual value, which is 6,30,000. Okay, so from here you need to deduct the deductions under section 24, which is the first one is NAV, 30% of the NAV. This is the flat deduction. So 30% of NAV. NAV is 6,30,000. So 6,30,000 into 30% is if you do that, you will get 1,89,000. Then interest on borrowed capital. Interest on borrowed capital. Immediately you should remember the limits. This is 24B. Immediately you should remember the limits. See, if it is a let out property, no limits. right? If it is a self-occupied property, then there are some ceiling limits. Maximum 2 lakhs for construction and repairs 30,000. Okay, overall 2 lakhs only, aggregate 2 lakhs only. So maximum 2 lakhs only he can claim. Here obviously it is a let out property. Okay, and we will, how much interest he paid? 35,000 interest he paid. So and paid 35,000 during the year. Okay, so 35,000 we are going to deduct, and then remaining 6,30,000 minus 1,89,000 minus 35,000 is our answer, which is 4,06,000. So this is income from house property, which is 4,06,000 is the answer. Okay, so we are done with this. So here the concept is we did not claim the unrealized rent. Why we did not claim the unrealized rent? Because all the conditions did not satisfy. So you should know the conditions. Okay, next one, let's see this third question. Mr. Raghav has 3 houses for self-occupation. What would be the tax treatment for assessment year 2020 and 21 in respect of the income from house property? Just a sec. Okay, yeah, so we discussed there is something called as deemed to be let out, right? So deemed to be let out. So what is deemed to be let out? If an assessee has more than 2 house properties for self-occupation, then remaining houses will be classified as a deemed to be let out. Now here he has 3 houses, all for the self-occupation only, right? So now here if you see the option B, 2 houses at the option of Raghav can be treated as a self-occupied. The other houses would be deemed to be let out. So if it is a let out property, if it is a self-occupied property, then he can claim the nil value benefit. Okay, so if it is a self-occupied property, he can claim the nil value benefit. So he can claim 2 houses as a self-occupied properties, and then he can claim NAV is equal to nil value benefit. Okay, but if he has more than 2 houses, then the remaining houses he has to declare it as deemed to be let out. So what happens if the deemed to be let out? How do we, what is the GAV? How do we calculate it? This is given in the last class. If you see, yeah, now if you see here, deemed to be let out, what did we do? So we will take expected rent is equal to GAV. There is no actual rent, we know that, right? Because we did not give actually let out to anybody, so there will be only expected rent. Okay, all right. Now next question. So this third one is done, and then second one also done. The first one also pretty much the same thing. Mr. Rohan, a resident individual, owns 3 houses in Chennai. One house is self-occupied by him, and second house also self-occupied by his son, and the third house is vacant during the year. You are required to highlight the steps involved to compute the income from house property for Mr. Rohan under deemed to be let out concept. Okay, so first of all, there are 2 houses which are self-occupied. We are talking about the third houses, right? And then he can claim self-occupation, self-occupied benefit, nil benefit only for 2 houses. Now what about the third house? Third house is not self-occupied. Now shall we call that as an unoccupied property? We discussed that there are 3 conditions he has to satisfy. He can claim unoccupied property only if the assessee is not staying in that house because of the employment or business purpose, and he's staying outside in another city, and then he has a house there. We have discussed some conditions. Clearly he did not satisfy that also, so it is not a unoccupied property also. So it is neither self-occupied property nor unoccupied property. So it will be considered as a deemed to be let out. Okay, in deemed to be let out, what do we do? Expected rent is equal to GAV. Same concept. Okay, now they did not give the numbers, so we don't need to do it. Now we have done some we were doing some questions, right? I guess, just give me a sec. Okay, so pre-construction interest, in the previous class we have discussed the steps. Okay, we have discussed the steps of pre-construction interest, right? Now let's do this question here. And we also discussed, if there is any pre-construction interest, you can claim in the 5 installments. You can claim in 5 installments. Okay, so Purna has one house property in Indranagar in Bangalore. She stays with her family in that house. The rent of a similar property in the neighborhood is 25,000 per month. This is fair rent value. The municipal valuation is 2,80,000 per annum. Okay, municipal taxes paid is 8,000. The house construction began in 1st April 2017. Okay, so from 1st April 2017 it started. Okay, and then we took a loan of 20 lakhs from SBI. So from the Housing Finance Limited, and at the rate of 9% per annum. On 1/4/2017 we have taken the loan. The construction was completed on 30/11/2019. The accumulated interest up to the end of the year, okay, the accumulated interest up to the end of the year was that 3,60,000 rupees. Okay, 3,60,000 rupees. Now we have discussed some concepts. Okay, so 30/11/2019 means what will be the starting of the year? 1/4/2019, and it will end on 31/3/2020, right? So that means the construction is completed. The construction is completed in 1920. Remember that? Okay, let's do our steps. Okay, so in this question it's actually not required. It's a very simple one, but like there may be a big questions. It's better always you follow one format, right? So let's try to do that steps. Step 1. What is step 1? Date of completion of construction. Completion of construction. When did we complete it? They have given some 30/11/2019, right? Yeah, 30/11/2019. Okay, then next one, step 2. What is preceding 31st March? Preceding 31st March will be for this 31/3/2019 only. Okay, remember 31/3/2019. Then date of repayment of loan, like if you have any repaid, which is nil, then we have to take whichever is earlier, right? Obviously 31/3/2019. Now we will decide the construction period. Step 3, construction period. So this is pre-construction period. What is pre-construction period here? So first one, when did we borrow the loan? The start date is date of borrowed loan, I guess 1/4/2017 to end. I think we have written in detail in the steps, right? So I'm not writing it again. So date of loan borrowed, which is 2017, 1/4/2017, right? So step 2 date. So end date is nothing but step 2 date. Step 2 date it is what? 31/3/2019. So 1/4/2017 to 31/3/2019, right? So here we have 2 years. So 17 and 18 and 18 and 19 is the pre-construction period. Then step 4. In step 4 what we are doing? In step 4, sorry, that is step, this is step 3, yeah. Now in step 4 we'll calculate the pre-construction interest, which is 20 lakhs into 9%, 1,80,000. This is for 17 and 18. We did not repay anything, so total outstanding. So 20 lakhs into 9%, which is 1,80,000. This is for 18 and 19. So total will be 3,60,000. Okay. For us in this is a basic question. So they have given in the question itself. So 3,60,000 is the pre-construction interest. Now step 5. What is step 5? In step 5 we will do step 4 divided by 5, which is 3,60,000. Why 5? Because we can claim in 5 installments. We cannot claim the entire deduction. We can claim only 5 installments. In 5 installments, 3,60,000 divided by 5, so 72,000. So 72,000 is the pre-construction interest we can claim as a deduction. Okay, currently which year we are in? Now again on 31/3/2024 the Purna paid 2,40,000, which included 1,80,000 as the interest. See, when we are paying this 1,80,000? On 31/3/2014. Okay, we are in the 2024. We are in the assessment year of 24 and 25. So they will be talking about previous year 23 and 24, right? For this year we are doing the IFHP right now. Okay, for this year 23 and 24 we are doing IFHP, but the accumulated interest we calculated is for 17, sorry, pre-construction interest we calculated 17 and 18 and 18 and 19. So for these years, which is total, it will become 3,60,000. We can claim only 3,60,000. Okay, but this 3,60,000 we can claim. How do we can claim this? In 5 installments. This 5 installment part also I will tell you, but come to this part again. So in previous year 2023 and 24, this year also you have to pay the interest, right? Every year you have to pay the interest, right? Currently we are in when 2023 and 24. So this year we paid total 240. Out of that interest is 1,80,000. Even if they did not give 20 lakhs into 9%, it will become 1,80,000. So current year interest is 1,80,000 plus 72,000, which is pre-construction interest. Total you can claim deduction. Okay, now if you see, this is a self-occupied property. Self-occupied property means NAV will be nil, right? Deduction under section 24, there are two deduction. One is 30% of NAV. The 30% of NAV will not be there, right? And then in the question they might have given municipal taxes also. That also you cannot claim because everything is nil here. Okay, but you can claim interest on borrowed capital. That we know maximum we can claim 2 lakhs. But here what's happening? So 72,000 is the previous year interest, pre-construction interest. Current year interest is 1,80,000. Total it become around, so 1,80,000 plus, yeah, okay, here itself done. So which is 2,50,000. So 1,80,000 plus 72, 2,52,000 is the total interest. But we know that maximum we can claim only 2 lakh. Now remember that you will get a negative figure that will be called as a loss from house property, and then this loss from house property you can carry forward to the next year, and then again you can set off. Let's just say in the next year you got a profit, you got income from house property 3 lakh. So you can set off, remaining 1 lakh only you can pay tax. That set off and carry forward we will discuss in another chapter. Okay, so this is this one. So this question is over. Make sure this pre-construction is interest, one of the important thing. And one more thing, one more step is involved here, which we did not write previously. There is a step 6 also you can write. Sometimes if they want to complicate the questions, right? They can give. So step 6 is, like we said, only from the pre-construction interest you can claim in 5 installments, right? So that means, just a sec, yeah, that means you can say previous year of completion of construction plus 4 years. So that means from the date of completion of construction you can claim as a deduction in 5 years 5 installments. Okay, so that means, let's just say like in 2018-19 pre-construction interest I paid something, I incurred something. So can I claim in 2030? No, I cannot claim in 2030. Okay, so that's why we need to check this also. So when is the previous year of completion of the construction? In our question it is 17 and 18, right? Isn't it? Sorry, I think that is the starting, I guess. The construction was completed on, yeah, 30/11/2019. So that would be 18 and 19. Yeah, previous year 18 and 19 we have completed our construction plus 4 years. Okay, that means 18 and 19 1 year, 19 and 20, 20 and 21, 21 and 22, and 22 and 23. Okay, so in these years we can claim the deduction. Okay.